Welcome to Invest's Soundbite on investing with impact. Today we have a very special guest, Wally Hunter from EnerTech Capital, and he'll be sharing with us some of his vast experience investing and some of the interesting angles that the fund looks at in the decarbonization space, among many other trends in energy efficiency and e-mobility. But first, to give you a little bit of background, my name is Julia Wilkinson. I am the founder and CEO of Invest, and we capacity build family offices, funds, endowments, and institutional investors on impact investing. To do so, we introduce some of the world's leading investors and some of their interesting approaches to impact, both market rate driven funds and some who are putting the impact ahead of returns. EnerTech, as Wally will describe, is a market rate driven fund. And the focus of this evening's discussion is on low carbon transformation and the investing that will lead to that decarbonization. So Wally, to get started, could you please tell us a little bit about yourself?
Yeah, so thanks, Julia, for having me on. So just quickly on my background, I spent 18 years at RBC, Royal Bank of Canada, early in my career. The first half of my career was in the capital markets, investment banking side. The second half was actually in the late 90s when what was at that time clean tech, which people didn't really have a name for it. I started the bank's investment theme around investing in alternative energy technology. So many things around hydrogen, wind power, solar. Back in the late 90s is kind of when I started in this business. So that's kind of my history there. And then I joined EnerTech in 2003, and we're now on our fourth fund.
Amazing. So you're practically a pioneer in the clean tech space. And tell us, like, as I ask all my guest speakers and attendees at my live events, what does impact mean to you when you hear that word?
Yeah, so we kind of look at impact in I guess, really two ways. One is, to your earlier point, they needs to be economic and people need to make money, but at the same time, has a measurable impact on carbon. So when we look at an investment, we obviously need to see how it will scale economically, because people will do things that are easy to do, but they also get a payback, but there is a carbon reduction piece to it. We kind of look at that double bottom line is our definition.
Excellent. So tell us about EnerTech, the vision behind it, and sort of how what brought you to become part of the team.
Yeah, so the history on EnerTech, Scott Ungerer, the founder, came out of a electric utility. So you think about electric utilities back in the late 90s, they weren't really thinking about ESG or carbon reduction at that time. Scott was sort of an innovator within a utility that said, we need to start to focus in on this. And eventually what happened was he created EnerTech, and they became the anchor investor in our first fund. So they kind of anchored getting EnerTech formed, and Scott brought me in 2003 as we kind of built out that strategy around kind of energy technology and clean tech.
Amazing. And you started to touch on this a little bit, but you are a market rate driven fund, correct?
Yeah, we've got a mix of investors in the fund, both institutional, family offices, and a lot of focus on strategics. So strategic investors, have two reasons for investing in companies like ours. One is to get a financial return. Secondly is to get access to innovation and technologies that have impact. And that's becoming even more and more important in the current world we're in, as more corporate entities start to think about ESG and their strategy longer term.
Great. So originally your strategics were more looking to innovate their own potentially very core supply chains, but now you're seeing more interest from other types of investors and other types of ESG mandates, I guess we could call it.
Yeah, there's definitely the ESG mandate has become a big part of the investor set in our world, and many of them are doing direct investing as well as fund investing. So they're looking at it as a way to kind of get a return, partner with a group that's making investments in the space, and then the strategics, large corporates are thinking about it as a way to enhance innovation that they can lower their carbon footprint within the organization. We've got many examples of large corporates that also are looking at decarbonization, and this investment in this area creates that opportunity for them to invest in companies directly, but also to use those technologies to reduce their carbon footprint.
Excellent. And so on that point, what exactly, how do you see, or what areas do you focus on at EnerTech in the decarbonization process? Understanding, of course, you're looking at the community first, but what sort of
so there's
regions?
there's kind of three broad areas that we focus in on. So what we call Industry 4.0, which is things that are in the commercial industrial side of the world in their manufacturing process or in their product. How do we help them enhance that from a overall energy efficiency point of view or from a carbon reduction perspective? And then mobility is also a big component of what we like from an investment point of view. So looking at opportunities in the EV charging, connected vehicle to grid, anything that creates that connectivity to low carbon vehicle applications, including hydrogen. We've certainly looked at hydrogen over the years for vehicles as well. And then the final area is really what we call the connected customer or the networked customer. So that your home, having more and more energy efficiency capabilities within your home that allow you to save energy, water, any resources from a cost perspective, but also from a carbon perspective.
Very exciting. And for those who are listening who don't know, transportation is one of the largest emitters of CO2 in this country, as well as the generation of electricity and power from industry. So both of those areas you are targeting in some part of the supply chain. And then finally, of course, heating the home, using energy at the home, the end consumer is also taking a large piece of that pie. So tell us, I know that you've had some exciting news recently in one of your portfolio companies. Can you explain both a little bit about what Enbala does that was recently acquired, and what distributed energy is in that context, and tell us a little bit more about why that investment was such a success?
Yeah, so if the viewer is thinking about what the kind of current environment we're in is all about distributed energy, so people are now in their homes, they're able to take control of energy assets to reduce power, but it also is happening at the commercial industrial level where there's a lot of redundancy in power plants. You can put solar on the roof, you can put storage in, all those assets that you add to your home or to your business become what's really called distributed energy resources. And what Enbala did was created a software layer that allowed you to more effectively manage those assets and tie it into the grid network so that the grid operator could also get the benefits from the fact that they could fluctuate assets up and down depending on where power usage is. So it created that ability to monetize as well assets that were out there in field. What Enbala had was really that software, hardware control capability to figure out which asset is best to use at one particular time for energy reduction. So we think there's going to be a more broad trend globally in what we call distributed energy management, so that everything is, you can't build more power plants. You need to have more of a decentralized model where you're generating in your home, solar is generating power, you've got some storage, your EV vehicle is now a storage medium and a backup power medium. So everything is going to be interconnected, and you need software that's intelligent enough to optimize which asset based on power prices and other factors, and even AI applications now around weather conditions and storms, which assets you should use at a particular time. So I think that's really the success that Enbala had in the distributed energy resource management side of it, was what was attractive in that sale to Generac. So in Generac, who bought it, it does backup generation in Florida. You obviously know about backup power because you need a lot during storms. But they viewed this as a way for them to get obviously into the market in a much bigger way around controlling other assets other than just backup power.
Very interesting. And so, and you mentioned the primary client in that particular instance right now is bigger industry or corporations, but in the future, you see this spreading all the way to the home where the individual will also generally manage their energy in this way as well, correct?
Yeah. I think it'll be like an aggregation story because you'll be soon able to take all the houses on your street. Everyone's got the ability to control certain parts of their energy usage, aggregate that load together, and the utility buys access to that ability to reduce power. And a good example is in the early days we were investors in demand response, which you probably have heard of. It's where you're controlling air conditioning units in particular to move them up just a little bit or down a little bit depending on what's happening with the power grid at any point in time. And there was successful company for us was a company called Converge. And really what they did was go and aggregate together many homes and many businesses to be able to give the utility flexibility in their power generating assets by reducing electrical consumption, maybe upping the temperature in the room by half a degree for a very short period of time. If you take that across a whole bunch of places, it has a big impact.
Amazing. So not only is it going to become more aggregated and potentially also democratized, would that be the correct word? Because the end user is also in some ways able to aggregate these resources and potentially even monetize them?
Yeah, and the players in this market are changing too. So you've got, sort of when you think about, Google, and you've got Apple, and you've got Amazon, they're all now getting into energy management as part of what they do. And you think about Alexa and the fact that you can now use it to control assets in your home. That's going to become a device that's going to know what all your energy usage is in the home. They're going to know what your shower temperature is through to, whether your refrigerator is running at, too high a level, you could turn it down by a bit, and this is how much you're going to save. So the analytics associated with that, we think a lot of those companies that the customer is used to, which, is the Apples and Googles, they'll become mini utilities for the customer to sit there and say, you know what, I was looking at my phone, and if I do this, it's going to save me this amount per month, and my carbon reduction is X, right? That's where the trend is going. So it's, where everyone is very comfortable with those devices, that's ultimately where things are going to get controlled in your home.
And that is powered by what we call the Internet of Things, correct?
Yeah.
So
all these devices talking to one another through an IoT application is going to be how you start controlling them. Everything you buy in future, and my prediction is it'll be embedded into the refrigerator you buy. It'll be embedded into the washer you buy. You won't even have to think about it. It'll be an internet enabled, product when you buy the next generation product. It'll have a power consumption piece built into it that you can control very easily and decide to, kind of program it to utilize it at a certain rate, because a lot of these things are typically motors that just keep spinning, but you can, have variable speed motors that allow you to do more fluctuations in that. It saves a lot of money if you're able to do it more efficiently.
Amazing. And all of the data created by these machines, as you mentioned, Apple or some of the other big players would probably become some of the aggregators. But my guess is that in the interim, there's a lot of sort of companies who are trying to corner aspects of this market and aggregate towards and resell towards these bigger companies. Is that correct? Is that some of what you're seeing in the market?
Yeah. I think there's going to be more players that start into the aggregation business, and even the charging networks for EVs. It's also going to become about the data, right? And you've been involved with companies that are doing charging stations in commercial locations. It's not just letting the customer charge their car. You're going to have valuable data that people are going to be interested in for trends that they're going to utilize from those charging stations. And the utility is going to be able to know what the battery levels are of the cars and things like that are parked in those locations. And could they use the car as a injection back into the grid for 10 minutes while it's charging, right? So there's going to be bi-directional capabilities we're going to start to see happen.
And on that point, tell us more. Do you see this bi-directional future coming soon, or vehicle to grid transactions, as you mentioned? And do you think that the like sort of like the gig economy model will persist, where the driver is able to monetize this as well? Or who?
Yeah, I think that's really the trend is happening much quicker than most people think. This bi-directional capability, we're seeing more and more companies that have that built into it. I mean, we saw a mobility deal this morning where, they're putting it into even motorcycles, things like that, where it's all about the data. Even if you look at Tesla, Tesla is not just a car company, it's now a data company as well. I mean, it's a computer on wheels, right? So that's why people view it, why is it so high priced on the market cap numbers? And it's because of the other aspects of it that'll come into to play.
Yes, a very exciting time for Tesla and for the whole industry to have such a publicly traded company outperforming all the other automakers, I guess for the reasons you mentioned, that it's perceived as something beyond an automaker.
Yeah, exactly. And GM made some big commitments today to EV. So I think even the big auto players are starting to recognize the critical importance of this. California is going to require that all cars sold in California by, I think it's 2030 or later, are all electric.
Incredible. And yeah, I've seen some commitments from certainly in Europe and other countries with similar mandates. Even Miami has a commitment to reduce, or to, I'm sorry, to increase the amount of EV drivers to about 40% by 2030. So we'll see, hopefully they're able to mandate these type of things officially as well. You are located outside of Silicon Valley, correct? Tell us a little bit about why you guys chose some of the cities that you're located in and the opportunities that has risen for you.
Yeah, so I'm actually based out of Toronto, which just west of Toronto, actually. And then we've got offices in Philadelphia, Boston, and then actually down in Florida, we've got an office. Now, we have just done a partnership with SMUD, which is a big Sacramento utility, in helping co-architect, and we're one of the founding members of the California Mobility Center in Sacramento. And that will become a hub of commercialization for new emerging mobility technologies. And SMUD, the utility, will be looking to partner with many of the companies that come through there, and we will look to invest in opportunities that may come out of there.
Oh, amazing. And while it's in California, I assume it's not the traditional VC capital, so you're sort of democratizing venture capital in that particular region. Is that correct?
Yeah, I think it'll be California based, but it'll look at opportunities globally in mobility.
Amazing.
And we're doing some stuff in Ontario as well, because Ontario, Canada, Toronto area is quite focused on automotive technology. So the nexus between Toronto and California, it makes a pretty interesting kind of partnership between Canada and the US on the emerging mobility space. So you got big parts manufacturers in Ontario, like Magna, Linamar, you got General Motors, you've got all the big manufacturers of auto parts because it's so close to Detroit. And then in Sacramento, California, the regulations and things like that in California can be extrapolated back into the Ontario market. So it's got some really great partnership opportunities that we think will come out of the California Mobility Center. And for those that are interested in it, if you type in California Mobility Center, you'll see a lot of information on it. Now it's been fully launched and is active. So those of your viewers that are interested in mobility, you'll kind of see our involvement as well with the California Mobility Center as part of that.
Fantastic. Yeah, we're also excited in Miami that we've seen some progress on this region becoming slightly more focused on innovation in the space, with Ford autonomous vehicles setting up shop here, and some excitement around the Reef Technologies sort of vision for the future of parking lots and economic hubs there. So hopefully we can create a trifecta across the country and Canada as well.
You got a lot of cars in South Florida. I know that.
That's also true. Everybody drives here. They're not the best public transport.
Although I have taken that train that runs from West Palm down to Miami. I've done that one. So
the Byte line, that's a wonderful.
Yeah.
It's been closed for COVID for the past few months, but it does make the commute so much smoother for this sort of this South Florida metropolis all the way to West Palm. So tell me, well, we talked a little bit about, the type of investors you're attracting, but I'm curious, you had mentioned that you are seeing more interest from investors who are focused on ESG and are even interested in measuring and really managing some of those metrics across their portfolio. Can you tell us a little bit more about that or provide any examples?
Yeah, I mean, we've had a fair number of family office and other institutional investors that have ESG as the prime mandate, and as part of that, we do annual surveys for some of them around the impact of our investments on carbon. And we've typically gone through each company and tried to figure out what would be the potential carbon impact from the revenue that it's generating. Now, it's not an exact science because some of these companies, they're still relatively young and they're building their product, but we've had very good results in all of the surveys we've had to do around our impact from an ESG perspective, and how we try and kind of promote the reduction of carbon in that, in addition to all the other pieces of ESG, including the hiring of different types of individuals in companies, women, minorities, things like that as well. So.
Excellent. Excellent. Yeah. Diversity and inclusion, such a important and relevant topic this year. And also we're seeing more and more data pointing to outperformance from diverse teams. So congratulations on that. Also, I'm curious, purpose-driven entrepreneurs often are approaching this issue with passion around, decarbonization and impact. Do you find that a lot of your portfolio managers are also passionate about the environment or the potential impact that they're having in the space?
Yeah, I think we all are in the space because, as I mentioned earlier, when I started in, late 90s, there was like probably 3 groups doing things in this area. It was not mainstream. And even for me to try and do these investments in a big bank who wasn't thinking about them either. So I'd say people that have stayed in this business and then come into this business are definitely passionate about, the whole area of carbon and, helping reduce carbon, but also trying to help find ways to create payback for people as well. So there's more funds now than there was back in the late 90s, but I think it's a good thing because it drives more capital into this area. You need it. We were one of the pioneers in it, but there's now lots of other people that are out there with us helping to build companies.
Are there, and I assume that means you have more co-investors that you might find can partner with you on important deals that make sense, or exit opportunities, and that's always good for the industry overall.
Yeah, and even successful family office, high net worth investors make great board members often for these companies because they made their money somewhere and they make their money from selling a company. They're good coaches for these young management teams who may not have seen the kind of things that the board member has seen. So we have a couple of companies where good examples where high net worth investors, we put them on the board and they've really helped the young entrepreneur figure things out a lot quicker and not make the same mistakes that they may have made early on because they said, here's my experience in doing that. So we do that a lot. We bring independent board members on most of our companies.
Since it's just happened that we have a new president-elect in the United States, while you're in Canada, tell us what the Biden election means for this industry, or what your opinion is on what the future of green energy and green incentives in the United States could be for the broader market.
Yeah, well, I'll stay out of the politics because right now it sounds like there's no one's got access to the White House at the moment.
Fair point.
But anyway, I mean, I think it's a positive. The policies that the new president has outlined look very positive for our sector, both in terms of the dollars that the government's prepared to invest, but also looks like the policy side of it will be helpful to the story. He seems to recognize that this does now create jobs and economics as well as being a good investment. So I think we've been saying that even under previous administrations, prior to the last one, there was a mixed bag of policies, but solar and storage and all those new technologies all paid back pretty nicely to investors, even without a huge amount of government subsidy, because the technologies are so good now that they create the return that investors need.
Oh, that's excellent.
And
So
Canada, we've always been very progressive in Canada around emerging clean tech applications. So I think the policies through successive different governments in Canada has been focused on that area for a long time.
yeah, so that's exciting. If I understood correctly, at least in your experience in your portfolio, the subsidies or some of the government incentives are not necessary to lead to the outperformance. However, of course, it's a welcome boost when all the stars align.
Yeah, exactly. It helps them to maybe design the next version of the product, or that's where I think it comes in. If you look at it on its own, solar is very competitive, and so is wind now. So I think people recognize these assets needed subsidy at the beginning to get them to a certain point, but now it actually becomes pretty economic for someone to put solar on the roof, storage, and you don't need the subsidy that in early days you had to have, right? It's like any industry. When it starts out, you probably got to do a bit of subsidy.
Yeah, particularly in the high tech space. Excellent. And is there any other portfolio companies that you're particularly proud of or excited to share the story of as it relates to their impact and their success as a corporation?
Yeah, we've got one company that is focused on cybersecurity, and while it's not a direct carbon impact, it does tie in to your earlier point about having IoT connected devices within your home or your business. You got to worry then about someone hacking those assets and impacting your ability to use them. So we've got a company called IP Keys Power Partners that has cybersecurity capabilities for what they call the OT side of it, not the enterprise side of it, so that if you got devices that are in field, they can help monitor those for cyber attacks. So I think cybersecurity to me is another area that is going to become important as you have more vehicles connected to the grid, vehicles connected to the home, appliances connected to your phone. There will be cyber attacks that you got to worry about when you start to have all those devices. So I think that's an area that we see a lot of really interesting opportunities in the market.
Yeah, that makes a lot of sense, because after all, we're even seeing now with these very sophisticated and I imagine secure utility companies attacks from even other countries right on the grid. So I can only imagine that it gets easier to attack if you have a lot of different ways in, I guess, through these networks of appliances, etc. Is that correct? That you actually become
the grid network is the grid network's equally as exposed, so that there's more cybersecurity applications that utilities are adding to make sure that if someone is messing around with a transformer somewhere, they know about it, because it can have a huge impact on the power grid and power supplies and all kinds of things within that now interconnected ecosystem of homes, right? So
right. Yeah, and I couldn't agree more that, well, sometimes we forget in the impact space that cybersecurity is really can have if not properly managed, can have a huge downside for data protection, privacy, or as you said, potentially even a risk to our ability to access energy securely.
Yeah, it's an enabler to the technology that you need to do the ESG piece. So the idea is you need to have a certain level of cybersecurity in order to do the things you want to do to reduce carbon, right? So it's just like your computer. You turn it on, you go on the internet, and you've got kind of power or safety related applications around cybersecurity, because you got firewalls and things like that. So to me, it's going to be the same for some of these technologies and that reduce carbon. You're going to need to be able to have safety, reliability, and all those kinds of things.
So almost, and I was actually just talking to someone about this the other day, almost an aspect of risk management or ESG management is that your startups have a cybersecurity policy because a plan and a strategy, because that de-risks the entire investment from day one.
Exactly.
Very interesting. Well, thank you so much for your time. Do you have any final words of inspiration for the audience on why it's so important or timely to invest in decarbonization, or any other visions you have for the future.
No, I mean, I think we kind of covered most of it, but I would say that there's a real appetite right now from an investment point of view. I mean, if you look at the public markets, even around what's happening in mobility and EVs. And so I think the trend is your friend right now in the markets that we're seeing right now for investment in this area. It's no longer just a, kind of a small segment. People are buying into it, including corporates, as I mentioned earlier. They're buying into that. So I think the stuff that you do in your firm around ESG is going to become even more important. So I think that there's lots of opportunities that investors will have as well.
Thank you. And what is your vision for in 10 years, if all of the things that you kind of are betting on pan out the way you envision? What does the world look like?
Well, I think it's going to be interconnected to the degree that you're going to be able to manage pretty much everything in your home and everything in your business, remotely. And now that COVID has caused everyone to be in one spot, that connectivity, and there's 5G. I mean, I think it's going to be such an interconnected world that, you may not have to do the same trekking into a downtown location as often. Obviously you need to do it for certain meetings and things like that, but I think it's going to change the way we do business. And that COVID sort of it's a terrible thing, but in some ways it's also driven dramatic change. And, we're doing this interview, miles away from one another, but, the reality is we're both now used to doing Zoom calls and cutting deals on Zoom and all that kind of stuff. So I think that'll continue in my view.
Yes. Well, and interestingly, I on the decarbonization connection with that, this year is the first year in modern history and in post-industrial history that we will be reducing emissions year over year. I'm not sure. I mean, I think the last time I checked, it was about down 5 to 8% over last year. So quite a dramatic decrease. And a lot of it has to do, of course, with everyone staying home and sort of being forced. Obviously, industry also was slowed down for some months, but also the lack of commuting, the lack of travel, despite the increased technological demands of energy, we're also, like you said, seeing more renewable supply. So net year over year, there was the first decline. And according to scientists, we need to get down another 50 to 70% by 2030. So perhaps that's yet another way of being able to achieve those goals by being really working more remotely and staying in one place.
Yeah. Well, we still got to get to warmer climates when we're in Canada. So
that's true. Yeah. That's true.
Yeah. Whenever things get open again, we'll have to have a drink in Miami.
Yeah, there's always that. You can come to work here and we'll continue the remote work, but from Florida. Exactly. All right. Well, thank you, Wally. It was wonderful chatting with you. We look forward to staying in touch and following your success.